Value investing has proven to be one of the most successful strategies long term. When you look at Warren Buffett, he has used a value approach to really take stakes in different companies. Today's video, we're going to be looking at the best value ETFs that are out there and why you should be investing in these. Now, overall, what is value investing? Now, this does differ greatly from growth investing. Value investing is getting more than what you pay for with an investment, which is how they kind of built these ETFs that we're going to be looking at. Growth, of course, has been one of the most important, even if you look back starting in about 2011, the growth ETFs have done exceptionally well, while the value ETFs have actually trailed a little bit behind, with the exception of 2022. We know it was a very strong down year, roughly 20 to 22%. And overall, the value ETFs performed a lot better in relationship to those growth ETFs. Now, of course, to really fall into the value category, value versus growth, it is more looking at the lower price to book and looking at the price to earning ratios. The investing world has really broken into two different categories. One is value investing, one is growth funds. This segmentation really is a differentiator when it comes to how you're looking at them. Some value funds really tend to compare with a low price to book as well as a price to earnings ratios than those of a much broader index. They also tend to have much higher dividend yields, which going through the best value ETFs, you will notice that the dividend yield is quite a bit higher. And the big reason for that is a lot of them do contain smaller companies and a little bit more of the smaller stocks. So let's go ahead and get into this list. At number one, we have the Vanguard Value ETF, the VTV. Now, I know we did the Vanguard video a little while ago. A lot of people were really enticed with it. A lot of people said to check out a lot of different Vanguard funds, some Schwab funds, some iShares, a lot of different ones. So I did a little bit of homework, got a pretty good list going. So the Vanguard Value ETF, or the VTV, this tracks the performance of the CRSP US Large Cap Index, which measures the return of large cap stocks, holding about 350 stocks. Now, if you remember with the VUG, we were at about 208 different stocks. Looking at the VOO, that was about 500 stocks. Even looking at the VTI, that was about 3,000 stocks. This one holds 350 different stocks. Now, the average 5-year return on this is 10.6%, and still staying with that Vanguard exceptionally low expense ratio of a 0.04, which is normally what we see. Assets in this fund are $111 billion, and the dividend yield on this is 2.4%. So when, again, you look at the VOO, you look at the VUG, this has a pretty healthy dividend yield. Even when you look in comparison to the SCHD, the dividend yield is kind of right in the middle of all those. Now, of course, the top holdings for this one is Berkshire Hathaway, United Health, Johnson & Johnson, and JP Morgan Chase. So some very large companies that we see in there. But you'll notice the top holding, as we see in growth stocks, we're not looking at Amazon and Tesla and Nvidia, looking at Google. All of those are not the top holdings of these because they are built a little bit different when it comes to value versus coming in for the growth. Next one we look at is the iShares, is the Russell 1000 Value ETF, and this has the ticker symbol of IWD. Now, this one seeks and tracks the Russell 100 Value Index, which is large and mid cap. So now we're getting out of just going into ETFs that have those large caps. This does include a bit of the mid caps in there, which again, were kind of excluded when you look at that VOO and looking at that S&P 500. Now, the fund gives investors exposure to company that they think are undervalued. So this is kind of a ETF that is balanced on the undervalued relative to how much business these companies are doing. 5-year annual return on this is 9.2%, which is still pretty good. Big thing is when we start getting into the iShares, the expense ratio goes to 0.19. That is right. If you remember in the Vanguard funds, which is the reason why I do own a lot of Vanguard funds, overall, it had a higher return. Some of that was because of the expense ratio. If you're looking at the Vanguard, it was a 0.04. The iShares Russell 1000 is a 0.19. So a significantly higher, almost 5x when it comes to the expense ratio. Much smaller assets, 53 billion on this one. And then it's funny because then when you look at the breakout, Berkshire Hathaway, Johnson & Johnson, Exxon, JP Morgan Chase. So literally it is almost the exact same fund that we just seen from Vanguard, which was that VTV. But overall, this is the iShare in the Russell 1000 value. So again, a little bit of a different breakout and a much lower dividend yield at a 2.1% versus the 2.4 when it came to that Vanguard one. Next up, we have another Vanguard, which is the small cap. Now, a lot of people have said when it comes to the small cap investing, that this is going to be the year where a lot of small caps, and honestly, when it comes to small caps, they have a lot bigger runway performance wise and a lot bigger runway growth wise versus, these multi-trillion dollar companies. That is the reason why Vanguard small cap, it is VBR is the ticker symbol for this one, holds 800 stocks. That is right. Again, when you think of some of the VUG, which is at 208, this one holds 800 stocks and has 6% of its assets in the top 10 holdings, which means 6% in the top 10, 60% is in the top 10 holdings. And you'll see with this, again, building on the small cap, the value of the small cap, 5-year annual return, 8.9%, expense ratio, 0.07. So a little bit of a higher expense ratio than that 0.04 that we're usually seeing. Top holdings are Builders First, IDEX, Bunge in Atomis Energy. I think I'm saying that right. But as you can see, these are companies that a majority of us have not heard of. So a build out that a lot of people do is they will do a section that is the larger cap. You'll have some that are the mid cap, some that are smaller cap, and then some that are an international cap, depending how you kind of break that down. A lot of times what I see personally is 60% will be the larger cap, 30% will be kind of a conjunction of the mid cap and the small caps. And then the final 10% will be international stocks or international ETFs, which is the buildup that I usually see. Now, remember, with the portfolios and what we cover here, I'm not a financial advisor, but personally, I do not buy any individual stocks at all. I think the volatility and really the risk mitigation, I do not track them enough. I do not follow them enough to buy individual stocks, which is the reason why on this channel we focus on ETFs. I think it's a lot easier, especially from let's say, a little bit more unexperienced investor that is not going in and buying specific companies, but focusing on those ETFs. And of course, if you like the content I'm putting out there, go ahead and subscribe to the channel, and let's get into our next view. Next one we look at is the Vanguard mid cap. So we looked at the small cap. This one is the mid cap, which is the VOE. Now this one holds between small caps and large caps, roughly 200 companies. 12% of the fund is invested in the top 10 holdings. So a big chunk of it is within those small caps and those mid caps, which of course it is the Vanguard mid cap value ETF. And looking at this, we have a 9% 5-year return, expense ratio of that 0.07, which again is traditional when it comes to Vanguard. Assets under management are $16 billion. In the top holdings in here, we have Carrier Global, PACCAR, Nucor Corp, and Arthur and Gallagher and Co. So those are the top holdings in here. And of course, dividend yield 2.3. So I believe the ones that we've looked at so far has not had anything lower than a 2% dividend yield, which again is kind of traditional when it comes to the mid cap and the small caps. They do give a little bit more back to the shareholders because the value might not be there as much, or the big caps that are not willing to give anything back at all, like Berkshire Hathaway, really does make a big difference. Now we get into Fidelity. Now, Fidelity high dividend yield. This is an interesting one. And this one I kind of ran hand in hand with that SCHD. This one focuses in large and mid-cap companies that are expected to grow and pay increasing dividends in the future. Holds about 100 stocks, and 28% of the assets are in the top 10 holdings. Now, very similar to a lot of the other portfolios, 12.3% is the 5-year return. And the reason being, they are holding Apple, Microsoft, Nvidia, and Exxon are some of the big holders in there. So of course, when you look at the high dividend and also the growth that we have seen within the sector, holding Apple, Microsoft, Nvidia, all of them makes a really big difference. Now, expense ratio on this one a little bit higher at a 0.15, and they're holding around $2 billion in assets. But because it is a Fidelity high dividend yield or high dividend ETF, the FDVV is the ticker symbol. Dividend yield is 2.9%, which is a pretty solid dividend yield where you're almost getting 3% by holding this. And the last one we look at is the Spider Russell 1000 yield focused ETFs, or the ONEY, ONEY is the ticker symbol on this one. It focuses on the performance of that Russell 1000 Yield Focus Factor Index, which we did see again in a little an ETF, couple ETFs ago. The fund hopes to collect the average dividend payment to increase the total return. Now with this one, there is an 11.5% 5-year growth, which is good. Dividend yield at 3.5%. So this is a pretty big dividend yield when you think of everything else we had out there that was running, 2%, 2.5, 2.9. This one is 3.5. Now, of course, the top holdings in this one, we have Pioneer Natural Resources, Diamondback Energy, Valero, and Dow Inc. Now, some of those, of course, we know are traditional companies that hold a very high dividend yield overall. So again, a little bit different when it comes to the ETFs. When you look at the growth side, again, of the VUG and those large, massive growth funds that we have in there, and then looking at the value side, it's a little bit different when it comes to the investment strategy. So let me know in the comments what investment strategy you use the most, and I'll catch you in the next video.